with ISOs, what's happening? The employer is saying, look, Sharon, we appreciate you being here. We want to incentivize you to stick around. And what we're going to do is allow you to buy one share of our stock, whatever, it doesn't matter. Well, you can buy one share of our stock. Let's get rid of this stuff. Hold on. There we go, much better. You can buy one share. These are ISOs. You can buy one share of our stock at $5. And let me just check here. Please have me. Yes. So Jackie and Sharon. I don't know if you guys were on there, but that's okay. Okay. And Jackie, that's your email. Just give me a second, everybody. All right. Here, instead of writing that down, can you guys email me? Just email me at info@proexamtutors. Yeah, just email and say, if you're not on the distribution list. I'll make sure to take care of you guys there. All right, let's do this ISO stuff here. It's actually not terrible, but they're going to give you the employer is going to give you the right to buy their company stock at $5. Now, when are you going to do this? Well, you're not going to do it at $5 because there's no discount there. You're going to do this when the stock price here, if we're looking at a chart, your stock price is doing this sort of thing, and it starts to do this and it's heading up. Okay. And it heads up to $12. That's at that point, you're like, look, I'm actually going to exercise this incentive stock option. And so the stock is the stock is fair market value is at 12. I get to buy this thing at 5. All right. Now, in the back of our minds, we're going to keep in mind that we have something called the bargain element, and that is equal to $7. It's the difference between the fair market value and $5. It's the discount that I get on this thing. All right. So now we got this bargain element of 7. And if I want this to be a qualified transaction, what I'm going to do is wait. So I bought this thing, right? But I'm going to wait. I'm going to wait more than 1 year from the exercise. And I'm going to wait. And so this is not an or deal here. That's more than 1 year after the exercise and more than 1 year after the grant to sell this thing. And if I wait for more than 1 year after I exercise and 2 years after the grant, remember a couple weeks ago I mentioned, how do you keep is it grant and exercise? Is it exercise and grant? If you think about it, it should make sense. But if you don't want to think about it too much, which I don't blame you, in the alphabet, we get to E first. We get to G second. All right, so just as kind of easy as that. Let's let carry in. Okay. So now if I satisfy those two conditions, then what happens when this thing goes up to like whatever, $20? It goes up to $20. The whole thing from $5 where I bought it all the way up to 20 is going to be a long-term capital gain because I wait. In that point, it's a qualified stock option because I waited for more than 1 year after the exercise and 2 years after the grant to sell this thing that I bought at 5. And this bargain element of $7, it's all long-term capital gain as well. if I make a disqualifying disposition of this, if I don't satisfy these 2 holding periods, then what happens is that the $7 is treated as ordinary income tax. And I don't want that to happen, because if I'm given ISOs, I'm probably, making a good deal of money, and I might be in a higher tax bracket, and I want to take advantage of long-term capital gain. Cool. All right, Jackie, you sent me an email. Appreciate that. Awesome. Okay. That's on the ISO side. On the non-qualified stock option side, there's really, not much to it other than, what we're going to do is, at $5, we're going to give you the right to buy the stock. The stock goes up to $12. And we just have to be mindful here of this $7 bargain element. And the big thing is, like, for the ISOs, when I actually exercise the option, given these same figures, I didn't have a taxable consequence there. There was no income tax, no FICA taxes, nothing like that. On the non-qualified stock option side, this bargain element, when I go and exercise this, I don't have a 1 and 2 year holding period, by the way. When this happens, this is considered W-2 income. So I'll have FICA and all that stuff. All right. Now, if I wait for more than 1 year after I actually buy this thing, like the big benefit to a non-qualified stock option is that I actually just get to buy this company stock at 5. I do have to pay income tax on this bargain element. Okay, but once I, pay the income tax, what happens is my basis actually gets kicked up to $12. And anytime I sell this thing for more than 1 year after I've exercised, all long-term capital gain. And that's kind of the name of the game. Keeping the taxes as low as possible.